Okay, so if you live any kind of digital life, I mean, chances are you're interacting with Tencent. Maybe multiple times a day. You probably don't even think about it.
Oh, absolutely.
Mm.
Messaging, games, paying for stuff, scrolling videos.
Mm.
Yeah, their fingerprints are kind of everywhere.
It's just an incredible scale they operate at.
It truly is.
So today, we're doing a deep dive into Tencent Holdings. We've got a stack of sources here, analyst reports, from Morningstar tip ranks,
Mm-hmm.
and summaries from their recent Q1 2025 earnings call, plus some deeper breakdowns on strategy from Investor Insights Asia.
Right. And the goal here really is to unpack what all this tells us about this digital giant, like what's driving things now,
Yeah, what are their big bets? AI obviously comes up a lot.
and how they're handling that whole complex regulatory situation.
Exactly. And what the experts are saying, where things might be headed, basically getting you up to speed quickly on the key stuff.
Okay, let's jump straight in. Q1 2025 performance. The sources say it was strong. What are the headlines? Well, the reports definitely highlight robust growth. Q1 revenue hit RMB 180 billion.
Wow.
Yeah, and that's up 13% year on year. Pretty solid.
And gross profit.
Even better. RMB 100 billion. That's a jump of 20% compared to last year. Significant.
And the bottom line, the non-IFRS net profit, I thought that looked good too.
Did. RMB 61 billion. That's up 22% year on year.
And that non-IFRS figure, just to remind folks, that adjusts for some one-off things, right? Gives a clearer picture of core performance.
Exactly. It's a better gauge of the underlying sort of operational profitability.
Yeah.
And importantly, these results actually beat some analyst estimates.
Always a good sign.
Definitely mentioned as a positive in the reports.
So what specific parts of the business were really pushing that growth this quarter?
The sources point pretty directly to two main areas: games and advertising.
Okay,
They were really the engines behind that strong top line and profit growth.
got it. And I also saw they're actively returning value to shareholders, buybacks.
Yeah, that's right.
Yeah.
HKD 17 billion in share buybacks just in Q1.
That's quite a chunk.
It is. And they're apparently well on track for their full-year target, which is at least HKD 80 billion.
Okay. That signals confidence, I suppose?
Seen very positively by investors,
No.
according to the materials, yeah.
All right, let's dig into that ad business growth because it seems really interesting how they manage such strong growth there. The sources mention network effects a lot.
Yeah, this is really critical insight from the sources. It shows Tencent's big advantage. Basically, user numbers overall on Weixin, WeChat, they were stable,
Right.
but user engagement, the time people spent in the apps that went up.
Ah, okay. So more eyeballs for longer.
Exactly. More engagement means more ad opportunities. And the beauty is they don't have to spend a fortune acquiring those users.
Yeah.
They're already there.
In the ecosystem.
Right. It's that network effect in action.
And they're embedding ads in the places where that engagement is really taking off, I gather.
Precisely. The sources specifically called out video accounts, search, and mini programs. Those showed the strongest growth within ads. That's what drove that overall 20% ad revenue increase. Places users are spending more and more time.
And because it's integrated into WeChat, like the sources say, it's super efficient for them, yeah.
Totally. Minimal upfront costs, compared to building a whole new platform.
Sure.
Low customer acquisition cost because the users are already there.
Right.
That's the power of that super app model. You add new features, new ways to make money inside this massive existing thing.
And the profit margins are better.
Exactly. Incremental revenue often drops straight to the bottom line. It's a huge benefit.
Okay, shifting gears a bit. AI, artificial intelligence, comes up again and again in these sources, a core strategic focus.
Oh, definitely. It's clearly top of mind for Tencent management and for the analysts watching them. The report suggests AI integration is, well, it's already happening.
It's not just talk.
No, it's enhancing existing services, making ads better, helping with game development, boosting their cloud solutions. It's impacting things now.
But it takes serious investment, right? They're spending a lot on GPUs, AI infrastructure.
Yes, absolutely. Strategic CapEx, that's capital expenditure, is heavily focused on AI right now.
Okay.
Sources expect that specific AI-related CapEx to grow at a low-teen % rate.
Uh-huh.
Management seems really convinced this will create long-term value.
What's interesting, though, and I think Morningstar highlighted this, is the timing. It sounds like these big AI payoffs may be, a year or two down the road?
That's the tricky part, the nuance. The belief is strong, but the sources note there isn't a really clear near-term timeline for, say, weaving AI deeply into WeChat for revenue. or monetizing their chatbot effectively.
Right.
So analysts find it hard to actually forecast meaningful returns from AI right now. The costs are upfront.
But the big revenue gains might take time.
Exactly,
Yeah.
which can put a lid on margin expansion in the short term and maybe cause some bumps in results quarter to quarter.
So the inevit's happening, but analysts are sort of holding back on predicting the financial win.
Pretty much. One source noted that conservative approach, but they also made the point that the current share price probably already reflects that caution.
Yeah.
Meaning, if AI does pay off faster or bigger than expected,
It could be a nice surprise for investors.
could be upside not currently priced in. Yeah,
And even here, regulation plays a role, affecting AI.
it does. The sources explicitly mention regulatory changes around AI itself and also, crucially, rules affecting GPU imports.
Getting the hardware.
Right. That's flagged as an operational risk. It could affect their spending plans, the speed of development. It's a factor.
Okay. So beyond AI, what other big growth areas did the sources mention? Those investor insights, Asian deep dives.
Yeah, those materials looking at management's priorities point to a couple of other key spots. First up, international games.
Right. And a big reason is that games released outside China don't need that domestic Banhao license, correct?
That's a huge factor. It makes the international market really attractive strategically. The sources noted, this segment grew really fast before, much faster than domestic games sometimes.
Wow.
And Tencent apparently plans to acquire more international game studios to keep pushing that growth.
Makes sense. And the other big one seems to be video accounts within Weixin.
Yes. Video accounts are definitely flagged as a major growth driver. They kind of built it in response to the success of platforms like TikTok, Douyin. Monetization is still pretty early days, but the sources lay out some aggressive plans, boosting revenue from live stream tipping, live stream e-commerce.
Okay.
But the really big opportunity they see is in short video feed ads.
And are users actually using it, spending time there?
Apparently so. The sources mentioned time spent per user, videos viewed per user. Those metrics are up significantly.
So the potential for ads seems real.
That trend definitely supports the monetization potential there.
Okay, we absolutely have to talk about the context here, the regulatory environment. It's just a constant theme in all these sources, isn't it?
Yeah, you really can't talk about Tencent without getting into the regulatory landscape in China. It's clear from the sources this is still a major risk factor, not just for Tencent, for the whole sector.
And it hits them in specific ways. Let's break that down. Domestic gaming, that Banhao system you mentioned.
Right, the Banhao license needed to make money from new games in China. That introduces risk. The sources talk about past suspensions of licenses.
Right, I remember that. Caused delays.
Yeah, uncertainty, games piling up that they couldn't release, and even things like minor player protection rules, while maybe not hitting revenue directly, they forced Tencent to reallocate resources. Engineers building time limits, spending caps.
Instead of making new games.
Exactly. And the sources mentioned the future is still uncertain regarding potential new rules, maybe around adult gaming.
Okay. And advertising, that's seen direct regulatory impacts too.
Oh yeah. The sources give some really specific examples here. The ban on K-12 education advertising, for instance, that just wiped out a whole category.
Wow.
Less advertising from new games because of those Banhao holdups. Specific rules on gaming ads themselves, like no celebrities promoting them. And even tighter rules for things like insurance and real estate ads, like banning certain accounts from selling insurance or restricting property ads that mention school districts.
Mentioning school districts, that's incredibly specific. Shows how detailed it can get.
It really highlights the complexity they're dealing with. Although, on a slightly more positive note, consumer staples ads were mentioned as being more resilient.
Okay. What about other content, like video, music?
Yeah, that area has faced hurdles too. Content launch delays, needing approvals, and past antitrust stuff like having to give up exclusive music licenses.
All right.
That impacted growth rates before, according to the sources.
So with all this regulatory uncertainty, this shifting ground, what's the management response? What are the sources saying they're doing?
Well, the materials emphasize a focus on optimizing costs, becoming more efficient generally.
Tightening the belt?
Yeah, and doubling down on those key strategic areas we talked about, AI, international games, and just generally trying to adopt more sort of sustainable long-term growth approaches that fit better with this new environment.
Okay. So let's pull it together. What's the expert outlook, the valuation picture based on these sources?
Despite everything we just discussed, the analyst sentiment across these reports remains, Well, overwhelmingly positive.
Really?
Yeah. Strong consensus of strong buy. One source had like 13 buys, one hold out of 14 analysts. Another showed 47 out of 50 analysts giving buy or strong buy ratings.
Wow. That's pretty striking conviction, given the risks.
It really is. It highlights that tension, doesn't it?
Yeah.
Morningstar, for instance, they give Tencent a wide economic moat rating.
Meaning strong competitive advantages, the network effects.
Exactly. But they also give it a high uncertainty rating, specifically reflecting those big regulatory risks.
So they see the strength, but also the potential volatility. How does that translate into price targets?
Well, the average 12-month target from one source was HK $645.33.
Which is quite a bit higher than where it was trading recently.
Yeah, represents a potential upside around 24.58% from the May 2025 price mentioned. But there's a wide range too. High target of HK $695, low of HK $550.
Okay. And the valuation itself, is it considered cheap, expensive?
The sources mention a forward price-to-earnings ratio of 17.
PE ratio,
Yeah.
how much you pay for each dollar of expected earnings.
Right. And 17, well, it's not dirt cheap compared to some others, maybe. But many analysts seem to feel Tencent's growth potential and ecosystem justify that premium.
Mm-hmm.
Morningstar also prefers looking at a core PE, which excludes investment gains. That's a bit higher, maybe 19 times 2025 earnings, giving a cleaner view of just the main business valuation.
Okay, just looking ahead one quarter, Q2 2025. Any expectations there?
Yeah, the sources forecast EPS earnings per share around HK $7.13 and sales around HK $195 billion for Q2. And it's worth noting, Tencent has a really strong track record here. They've beaten EPS estimates 100% of the time over the last year.
Wow, 100%.
Yeah, compared to an industry average around 54%. So they tend to outperform expectations.
Okay, so let's try to wrap this all up. You've got this company showing strong financial results right now.
Yeah, momentum built on that incredibly powerful, efficient digital ecosystem.
And they're making these big, long-term bets. AI, video accounts.
Definitely look into the future. But at the same time, they're navigating this really complex, sometimes unpredictable regulatory world.
Which adds significant risk, especially in China.
No doubt about it.
Yeah.
Yet despite those risks, the expert consensus we're seeing in these materials is still very positive, seeing quite a bit of upside potential in those price targets.
Right. And there's that potential kicker from AI, right? If it delivers faster or better than people are currently modeling in.
Exactly. That could be an extra source of positive surprise down the road.
So thinking about everything we've covered, the solid core businesses, the potential from international games and video accounts, that huge AI investment, and the regulatory overhang, what do you think holds the most potential for Tencent's next big leap? And maybe what's the biggest single hurdle they face in getting there? Something to chew on after this deep dive.